$103 silver, boys and girls. Does that sound good to you? Sounds good to me. What's up, stackers? Welcome back to the Daily Stack Report, where we break down gold and silver markets without the hype, with context, and with real sources you can cite. Today we saw silver hit triple-digit territory for the first time, topping out at 103, and gold marched towards $5,000, topping out at $4,989, guys. Only $10 away from hitting that beautiful $5,000 mark. We're going to unpack what drove that move, what the fundamentals are saying, and what it means coming up next. But first, if you're stacking precious metals seriously, hit the subscribe button and tap the bell so you don't miss a beat. I really appreciate it, guys. Alright, let's start with the numbers because they speak volumes. Silver hit a record high above 103, topping out at $103 today, ending futures. Gold approached that $5,000 mark and was trading just under that level. Reuters reported spot gold near 4,989 before closing slightly higher than that. These prints are not just incremental records, they're structural breakouts driven by fundamental forces across the market. Gold's rally into the high 4,900s is powered by several overlapping drivers. One is the safe haven demand. As we typically go over, geopolitical and policy uncertainty continues to push capital towards protective assets. Analysts link political volatility, including tariff and policy swings, to rising metal demand. Weaker dollar dynamics is a softer U.S. dollar makes dollar price commodities like gold more attractive for international holders. With inflation pressures remaining elevated, investors are using gold to protect purchasing power. And global central banks are accumulating reserves, reinforcing long-term demand. Gold hitting record territory isn't random. It's a convergence of fear, currency dynamics, and strategic demand. Now let's talk about silver and that 103 breakout. Guys, we passed 100 in the early morning, or in the early starting trading period. I believe it was around like 9 a.m. From there we kind of went down a little bit, but then we shot up and we ended the day really bullish, ending it at 103. Markets like mining.com reported silver futures trading above $103, driven by a combination of safe haven buying, retail demand, and structural dynamics. Other reports note that silver's rally has been exceptionally strong, with some analysts forecasting even higher levels over time as industrial demand and supply constraints tighten. The move isn't a blip, it's a real break of key psychological and technical resistance. Silver's ascent into triple digits reflects not just financial demand, but also physical market pressure. Alright guys, real quick, if you're enjoying this, hit the subscribe button. I really appreciate it, and let's get back to it. If you want to sound knowledgeable, this is how you talk to your friends, guys. Get a little breakdown, spot price versus futures. Okay. Silver spot and silver futures are both printing above $100. That tells you traders are pricing near-term delivery and forward contracts at elevated levels, not just a fleeting print. Gold is behaving similarly. Physical and paper markets are both pricing in these record levels. When both spot and futures are elevated, the market isn't just spiking, it's repricing structurally. So what we're seeing is a reprice, and silver, it's more of a price discovery, and gold is that big hedge against inflation and some of the other crazy things that are happening in the world. Record prices don't always translate directly to physical entries. On the U.S. Mint website, the current pricing for proof silver eagles are $173, and when you go in store, if silver spot is around $103, you can expect to pay upwards of $113 to $118 for a silver eagle, just kind of depending on where you go. So I definitely highly recommend shopping around. Historically, pricing for standard silver eagles has hovered much lower, meaning today's spot benchmarks reflect intense demand, which still leaks into premiums. So if silver spot is $100, you're often paying $70 to $80 premium on top of that for a proof silver eagle, not just a regular, but a proof. Again, the regular silver eagles are about $10 to $20 premium. The proofs are sitting around $70 to $80 premium. Now the gold to silver ratio. The gold to silver ratio helps you understand relative value. It's calculated by dividing the gold price by the silver price. During this rally, gold was near 4,989, silver near 103. That puts the ratio roughly around 49-1, a historically low ratio, meaning silver is outperforming gold on a percentage basis. A dropping ratio like this signals that either silver is overperforming relative to gold, or gold is undervalued relative to industrial demand and safe haven demand. When silver outpaces gold like this, you often see momentum traders piled in, pushing the metal higher, faster than gold, which has deeper, longer structural demand. Alright guys, so today's moves show that precious metals aren't just trending, they're running, and the bull market is in full effect, guys. Silver breaking $100 for the first time ever and gold charging towards $5,000 is absolutely historic. If you want daily precious metals analysts grounded in real news and real data, hit subscribe and tap the bell so you don't miss tomorrow's update. And here's a question for you. Do you think silver hits $120 first, or gold breaks that $5,000 mark first? Drop your prediction in the comments. I'll highlight the best ones in the next videos. Thank you guys. And again, stay safe over this chilling weekend that we're going to have. Stack smart, and I'll see you guys tomorrow.